Welcome guys to another evening Friday Crypto Hangouts. It's good to be with you guys. Stony, Smokey, Small, how are you guys doing? How's the week, man? I'm on my edge of the seat right now just looking at Bitcoin. I know the drops happen and a lot of people are freaking out. I think we'll discuss that now, but how are you guys handling the drop?
Yeah, man, it's been an interesting week from my side. Just watching this thing, looking at what we said in the last couple of weeks and how this has played out. I think it's really been interesting. Smiles, I don't know what you have to say about the charts. I know you were saying last week that you feel that it's coming down, and I think our stuff lined up nicely. Like I said, if we do not break above the 43,000 to 43,500, we will not be going up. We came up to that, but we rejected that zone, as we can see, and we then saw last night this push down. So what are you saying, Smile?
All right. So definitely, as I said, the last webinar we had. So right now, I'm just reacting. So as as a trader, you don't predict, so you react. Then after reacting, that's when you know what next to do. So currently, right now, we're just seeing what Bitcoin is doing. No action yet.
So before we go into tonight's topic, Stony, let's have a bit of news. Let's see, what are you seeing from a fundamental point of view? As you know, myself and Smile, we don't really watch the news. We say, give us the charts and we'll show you the news. And some people say, give us the news and we'll give you the charts. But we believe the chart shows you what's going to happen. And some people believe that the news is going to tell you that. So what is the news saying? What do you feel is relevant to the market, and what do our members need to know that is relevant in the market, because we want to only give the most relevant news and information to the public about what's happening.
I think it's interesting, as I've mentioned earlier to you guys. You can see a lot of noise in the market regarding, Adidas or Samsung or this person joining this NFT or, this pump and dump Shiba Inu. What we're seeing in the market right now, you can forget anything in the news you're actually seeing, because it's mostly got to do with the futures expiring right now. And that kind of shows that a lot of people just necessarily believe what they see in the news, when we know that the banks are here, they control most of what happens in the market. So it's not always the news that's going to push the market up or down. So as we can see that this is the start of the expiry of Bitcoin futures. It's going to happen on the 28th of January officially, so it's going to close down by the 29th. And what we can see is people, especially the big bears, didn't think that the adoption of Bitcoin will happen this quickly. We've seen a lot of people start adopting, price going up and up and up, and they didn't expect price to go this high during this time. So they're pushing price down. They need to keep it below that 40k mark for them to get in sooner, so that this expiry can clear up, so they can push this market with the next future contract. Because obviously they're probably going to long the market. I don't see the market going for another year in the bearish side. I think it's time to go up, especially with all the hype coming in. So it's interesting to see that there's money coming in, but the bears are kind of holding on to it and say, hey, we're just going to hold on right now. We need to keep it at this level. Yes, it's hurting us as the retailers. We want to see action. We want to see stuff happen. But currently, that's currently what's happening. We're essentially seeing that these banks and big institutions are holding on to crypto right now, and they're going to keep pushing it down until this contract expires, after which we might see another bearish side before the uprun. But whatever you see in the news, it's nothing to do with Russia. This is purely the institutions just manipulating as usual. So I think let's have a look at what the charts are actually saying now that we know this. So it's going to be interesting.
It's going to be interesting based on what you're saying. Looking at some of our other data and metrics that we look at, we can see that commercials are quite bearish at the moment and busy putting selling pressure in the market. Now, we can also see this in the obviously the price action on the current charts. But we've also seen on lower time frames, looking at the sort of daily and looking at the 4 hours specifically, we can see that we had a nice little push up as a fake out on the 20th of Jan, where we pushed up and it looked like we were going to break above the $43,000 to $43,500 level successfully, but that was purely just a mitigation and a bit of manipulation to grab some last orders for momentum to the downside. And that is where we are now. Now, we've broken below the $40,000 level, which we've been keep hammering on and telling you guys about the $40,000 level. Now, looking at the daily, we need to see a candle close below the $40,000 level. I know this block is quite big, but just obviously this is just purely to give you indication of what you are seeing and what we are looking at. So the $40,000 range is what we are looking at, and we want to see a candle body. Well, not that we want to see it, because we would like this thing to finally go up now, but what we are expecting to see is if there's a candle close of at least 50% below this $40,000 level, then we're going to see a move down. So that is what we're expecting now from an expected order flow perspective. And we are looking to see what price is going to do. Now, Smiles have said we are not trying to predict the market. We're purely looking at what the market is showing us and how we are going to react on this particular case. Now, I've already exited the market because I want to see what's going to happen. There is still a small probability that we could see a price go up. Now, you've mentioned about futures being expiring on the 28th. Now, we know obviously around about that region of the 28th to 29th, every month we see a dip in the market, whether that be people taking salaries, whether it's futures. That for me is much of a muchness. It's based on obviously opinions, and obviously a lot of people are talking about the futures expiring and that. But, there could be various reasons. We are not the institution, so we don't know. All we know is we can see from our data and stuff that there is corrections happening normally on the 28th to 29th. Now, for this coming week, I would expect a bit of bullish momentum sort of back into the region before we see a continuation to the downside potentially, unless we finally break above this $43,000 to $43,500 level. But we'll have to see quite a bit of push in the market to see intent, like Smile said, earlier when we spoke. He said that there's no intention, there's no indication of money being pushed in the market. So up until that point, we cannot say until we have a clear break above the $43,500 level as a first sign or indication that we are potentially moving up. So up until then, I think, and now looking at the weekly as well, we've now started seeing this bearish candle breaking below this previous wick of this market structure on the weekly. So we can see that, if I just pull this for you guys, this momentum, we can see that this level is below this current level. Now, it's not set in stone yet because this candle has not closed yet, so it can still push up and then react into tomorrow with the weekend's volume. So we need to be mindful of that. But at the moment, it's looking like we are heading down. Smiles, give us some feedback. I'm not going to talk too much. I've already said too much. You give us a breakdown of where you think what we discussed. Where do you think we go those before we can potential recovery from here?
All right. Thanks, Smokey and Stoney. Well, right now, as I've said earlier, we don't need to do anything right now. We just need to react and see what the price is doing exactly, because the market takes from the impatient and gives to the patient. So we have to be patient to see what the price is doing. All right. Right now, with that said, right now, I've said on this chart I'm looking at, starting from the daily time frame, we can see the bearish momentum actually, and you can see how let me say, should I make use of the word support? You can see how price breached to the support of the region of 39,986. You can see how price breached into that. So before we can confirm anything or any move, even the right part, or let me say the right characteristics of a support is whenever price approaches a support, it should bounce back. And you can see we are just seeing from the daily time frame, we are just seeing should I even say a bit of consolidation, because price is just trying to react to it. So definitely we can't say price will break it until it has broken it. So we need to see what price have to do. So now, being that said, before we can say anything, we need to see momentum. We need to see buyers coming into the market. And now, checking what Bitcoin is doing, you can see we can't even spot out any momentum in this scenario. So as Smokey has said, we might go for more lower prices, because checking from the daily time frame, you can see below this recent support, we have a lot of money below. Yeah, we'll have a lot of money below that I think price will come and fill. Price needs money for efficiency, for good proper efficiency. So I need price needs to come down more to come and grab a lot of money. So the levels I'm looking at, if eventually BTC closed below let me mark that out. Yeah, closed below the 37,119 region, then the next zone I'm looking at, checking from the 4 hours perspective, the next zone I'm looking at is the 33,605. Yeah, I'm expecting a bounce from there if eventually we have a close above this a close below this recent support. Then the next one we'll be heading to is 33,605. That's my first zone. If eventually price did not hold this level, then I think what I told Smokey was that don't be surprised when we see Bitcoin at 28,835 region, because these two zones I've mentioned, the 33,605 region and 31,747 region, these two regions is very, very, very important for Bitcoin. Then if eventually we close above these two regions, then believe me, all money will be grabbed. Then we might have a retest, or we might retest the 28K region. Then why I'm saying all this is because we don't have to predict. We have to see what price have to do. So right now, I just have to put my hands and see what price would do. Seeing how price will react to the region I've spoken and I've marked out on my chart. So exactly.
For sure. Look, on the support and resistance topic, I mean, that's not something we necessarily want to highlight for the viewers.
Exactly.
It's a nice reference point, but I think as we know, because we don't trade retail trading strategies, we trade from institutional perspective. So with that, I think the consolidation, as you mentioned, when there's price consolidating together, that's a key form of maybe support, because we know that there's a lot of orders in these regions, for example. And as you've mentioned, that would be a key reaction, range for us to see maybe a reaction from here. But because we've tested these levels, if we want to talk support and resistance, and looking at these sort of support and resistance where it's tapped into these zones multiple times, not that I personally look for support and resistance, but looking at this, I think this is purely just a buildup of liquidity, and this is where potentially we could see price come and trade into to finally break this 28K region, and then potentially go down to lower regions that we've identified in the market. But again, it all depends on what's happening with price action and how the market is formulating for us to make calculated decisions. Now, let's talk about the topic of tonight, which is trading versus investing. Now, what are the key things that we need to consider when we're talking, from a trading versus an investing perspective? Now, a lot of times these two topics or phrases get interlinked in between, or used sort of in a laxy-daisy environment, or topic discussion in between. But the two is very different from each other. Now, if we look at the current market structure and we look at it from purely, whether you bought at the 50K, the 40K, 30K, 20K level, or whatever you want to call it. Now, if you are currently holding on to your portfolio because you are an investor and you're holding on for dear life because you believe Bitcoin's going to 100,000, like a lot of us, but you are ignoring what market structure is telling you. I think going into 2022 and looking at, all the stuff that's going around the US with the ETFs, looking at India with the INX that we mentioned last week, where they are, they've applied for Bitcoin and Ethereum EFTs in the INX exchange. These things we need to consider for potential futures, and like you've mentioned, Tony, like a lot of the institutions are holding that price down and waiting for the EFTs to be approved so that they can start, putting their proper orders and sizes into the market. Now, from an investing perspective, I just want to make this clear, is if you are in a position of holding, you can see market is trending down. The thing is, once we've broken below this 40K level, this from a market structure perspective becomes a concern. Depending now where you've bought in, if you're exiting here at a loss, keeping in mind when you are buying back lower pricing, even though you've taken a loss here, you can still, potentially, depending where the price is, you can still get gains, because what happens is when price trades down, let's say price trades down to this region, that gives you 25% discount. So whatever losses you've made, if you're buying with that same amount of money here and you're buying back 25 or 30% lower, you are getting more bang for your buck at this price, and you are essentially able to make a bit more when you're buying back at a lower price. So keeping this in mind, and this is what investors typically want to do, they want to buy back lower. It's not to say that investors are simply going to just hold on for dear life. We need to be realistic. We need to look at the market. Now, looking at it from a trading perspective, like me and Smiley, what we do and how we do, I'll tell you a little bit. This week, I climbed in some trades. I was busy with a bunch of stuff. I did not necessarily focus on actively trading because I was working on some other stuff. And, looking at that, I've now hit a drawdown on my account. Now, it's not a big drawdown, but it's still a drawdown because I am typically a day trader and I trade on a daily basis. So I'm in and out of the market, which for me gives me a little bit of peace of mind that whatever the market does, once I'm out of the market, it doesn't affect my portfolio. Now that has some pros and some cons to that. The pros being, irrespectively if the market goes up or down, once I've taken my profit and I've put my money in my stable coin, the market does not affect me. It can go up and down. Bitcoin can drop now to zero. It won't affect me because all that means is I've got a great discount and I can buy back lower and I can start trading again and building my portfolio. From an investor perspective, your profits are declining because you are holding on for too long, because you need to decide at what point is it not viable to hold on to a certain project, and at what point is it okay for me to take that profit and look for lower buying opportunities. And that's what we at TradeAcade and Moonacade is obviously going to help our community with, is to identify these key levels of where would be the best possible opportunity. Now this can, differ from person to person and portfolio size to portfolio size. So just keep that in mind. But
I think that's one thing I wanted to say. I think the key thing people should always remember, whether you're a trader or investor, is ensure that you're only using money that you are willing to lose. Because if you're going to worry about losing the money, that plays a huge factor in any decision that you make. So when you have money that you are already emotionally willing to lose, that's one big factor that's already going to be cut out of the equation. So I think it's important that people just always remember that.
Also, 100%. Also, the other thing that I want to point out that I didn't mention earlier about the investor, the advantage of being an investor is that because they're always in the market, they can catch the big moves. Because we as traders do not know when the market is going to make that big 100% 10x gains in that particular run. We don't know that. What we can tell you from traders, because we understand the way the market moves, we can tell you what the optimal trade entries is and where potential reaction points is for you to get into the entry. And that's why you'll see that a lot of our calls and our prices are quite spot on and accurate, and that you can see price reacts to it. So that's quite important, to have a mix between trading and investing, but it's important to understand in which category you fall into, that you don't confuse being an investor versus a trader. My personal perception is investor is a person that's got, extra cash on the side that you are investing over a longer period of time. You're not necessarily interested in the volatility and the fluctuations in the market. You've got set goals and objectives with your portfolio, where you bought in at a certain level, you want to exit at a certain level, and then take that profits out and move it into a new potential project from an investor perspective, and keep your remaining balance in that project if it's a long-term project. Whereas with trading, we look at where can we make gains for the day or the week on certain coins, where we can then move that profit into and build our investment portfolio for our long-term holds, but use a small percentage of our portfolio for actively trading to make those small caps or small gains, essentially to build up, to have a decent sized investment portfolio, whether it be for your family, for your personal, retirement and all of that type of scenario. So that for me is quite key to differentiate the two. So there's both pros and cons, but I think a lot of people confuse the two between what is actually investing and what is actually trading. So it's quite important to obviously get that going. So yeah, that's my take on it. I don't know if there's anything else that you guys want to say about it. But what do you guys think? What is going to be better now, looking at the current market situation? What would you say would be better? Would you be an investor that's just buying and holding the dips, or would you be, looking at potential short-term trades just to make some extra gains while the market's going down? Because there'll always be opportunities every day in the market. It's just a matter of looking at your trading plan and making sure that you meet your objective before you just simply enter the market because price looks good. Because if you just,
No, I think people need to obviously just be very aware of their own situation. There's some people that can afford to spend 8 hours a day really getting sniper entries and making themselves that 5% a day on their portfolio, because they're dedicating time and effort and mental energy towards that. But there's some people that just don't have the time, or don't have the even the interest to spend so much time on it, and they can kind of make the same returns by just following their own strategy, which is by holding it for a longer period of time, as they obviously know they did their analysis and according to how they've listened, and obviously they watch TradeAcade, the show, so they will know where that the price is going. So that those kind of things should be taken into account. But from personal experience, I've seen a lot of people being investors and a lot of people being traders, and I have seen more on the investment side that people who are investors tend to make more than the traders.
But that's like I said. Obviously, if you're going to be an investor and you're going to have long-term hold, you're always going to be in the market. So for you, it's easy to catch those bigger moves because you'll be in the market.
You're navigating the waters. You're actually on the boat. Yeah.
But it's also pointless to be buying at a high, and expecting that you're going to make a return on investment. So from an investment perspective, you need to know when a coin is overvalued or undervalued, because if you're going to be an investor and think you're smart and you've got a lot of capital, but you're buying the highs, believe me, you're going to make poor return on investment. So that's why the binocular reports that we've got, is so crucial for the investment side, because that helps you identify where's those key levels. If I want to invest in Matic or Shiba, not Shiba, but if I want to invest in Matic or Ethereum or Bitcoin or Avex or Luna or Terra, then at least I know where can I buy if I'm interested in that project, and not just blindly enter, because that's the worst thing you can do. And that's the quickest you're going to lose money, and get impatient because now you're not going to see the results that everyone's talking about. You're not going to experience, what it feels like to be able to make good, sound, profitable decisions. And that's where Moonacade helps us educate our listeners and our subscribers with decent information on how to do that correctly. In the TradeAcade University, we will teach you how to understand when the market is right to enter and how to enter those markets, and give you a systematic rule-based approach on how you can do this effectively, especially in 2022, because now we're entering a potential move where we can make some great gains, but it's pointless if you don't understand how the market moves and how you can capitalize on these great opportunities that's coming this year.
No, I fully agree. I think if people, they usually say the more educated they are, the more control you should have. So I think people should just navigate the waters safely and in control as much as possible.
Smiles, what are you saying? You're very quiet there, my friend. What's your opinion about investing and trading? I know you love trading just as much as I do, but what do you...
Definitely. What actually, you said it all, because my own take is actually that you don't invest in what you can afford to lose. Right? Because if you are investing what you can afford to lose, then you allow emotions to come to play and controls your thinking and your actions. So, and also, I think you said it all. Investors, let me say investors, takes, if not the whole move of the market, because nobody knows when price will pump or dump. And also, while they are taking, it has its advantages and also has its disadvantages. Because Smokey, you said it all. You said as an investor, you need to know when to sell off. Let me just use that English. You need to know where to sell off and when to rebuy again. Are you getting me? So right now, as a trader, I would say the best thing you could do is just to check out what price is actually doing and know when to buy and when to sell. You can actually buy from the top and you think you are still going to make S4 or S5 of your capital. It's impossible. You are going to make you've just made a poor financial decision, or let me say investment decision. So you need to know, you need to follow the market structure to understand where exactly price is driving to, when to buy from the extreme low and take your profit from the extreme high.
100%. I think, and that we cover in the course, which is great. It's a great investors that or new in. And that course will teach you how to do that, to get you the foundation to build up to be a successful investor. I think that's it for this tonight, for this topic. I think we've made some clear points on the difference between whether or not you should be investing and trading, keeping in mind you do need to make sure that it fits in with your financial goals, and make sure that you're not risking more than what you can afford to lose, and then take it from there. Thanks, guys. Have a good evening. Goodbye.
Cheers, guys.